So at this point, I think it's time to move on to our main topic that we highlighted at the beginning of the episode, something that I think we're both very excited to talk about. And that's the application for security tokens in public securities and how those technologies can intertwine. So in terms of Overstock.com, who sparked this conversation and the idea behind public securities issuing a security token, the Overstock.com platform is one that was an e-commerce platform that has, over the last 5 years, pivoted into the crypto blockchain security token space through the launch of T0, which is their security token exchange. We've talked about it at length here in this episode, and I'm sure that you've heard of it before if you're listening and are interested in security tokens. And so they launched T0, and that was kind of their first foray into the security token industry. From there, in 2016, Overstock.com, which is a public company on the stock exchange here in the US, as a public company, they raised $11 million in a preferred Series A publicly. So they raised another round of funding through additional stock that they were issuing out. 2 million of that 11 was actually issued on the Overstock blockchain registry. So they created their own blockchain to transact with these digital assets, which represented 2 million of their $11 million raise. So they built their own blockchain. They built their own trading system to transact with these digital representations of this offering that they raised in 2016 before T0 went live. So now fast forward to 2019, and T0 is live and trading the T0 equity token. And Overstock is now looking to recreate that $2 million in digital securities that they had already issued now to be compatible with the T0 exchange. And so what I took from this whole situation is that we've seen this before. And so in some of the very first security token offerings, the companies themselves were trying to pave the entire way. They had to build out their own tokens. They had to try to understand the security laws individually, and so there were many different interpretations. And now that we've gotten a lot more funding in the space, much more clarity from the institutions, or at least some clarity from the institutions, we've seen a couple of the earliest security tokens reissue or recreate in a 1-to-1 ratio their previous token under a new blockchain or a new mechanism such that it's more compatible now that we've upgraded our entire infrastructure. This is likely something that may happen again in the future for some companies, and it's one that it looks like Overstock is doing since they were so early in the space in 2016. This is even before the ICO craze and before almost anyone had heard of cryptocurrencies. They were trying to build their own digital securities, and so now in the last 3.5 years and hundreds of millions of dollars in funding later combined for the industry, it looks like they're trying to upgrade that. And so I think that's great. It's very interesting. Herwig, what do you think about that?
I think Overstock, specifically Dr. Patrick Byrne, who runs it, has always been a big advocate, and they deserve a lot of admiration from us for really helping create specifically the digital securities market, but really blockchain markets in general. I know Overstock was one of the very first e-commerce companies to accept Bitcoin. I have a good friend, so to you, Kyle, who I think he has something like a $500,000 coffee table right now because of that little feature. They've always been active, and such is clear in 2016 when they did this, first issuance of its kind. And undoubtedly, I've also seen Dr. Patrick Byrne speak. They have an incredible infrastructure that went behind developing T0 and the ability to help transact digital securities. So now that they're confident enough to do this with Overstock shares, I think that is a sign and a testament to where we've come today since then. And I remember reading that specifically in their letter to shareholders that they're doing this for the purposes of removing ownership restrictions and allowing for tradability on T0. No surprise that their very first issuance was probably built and designed in a way that offered very little liquidity. And that's why T0 is a fully equipped marketplace and exchange to try and transact these securities. So when they do that with the Overstock token, with their now A1 Series A preferred, it's going to be really exciting because they're showing the market that it's possible. And for a lot of participants who are watching on the sidelines, that's really what they're looking for, to see, real big companies like this willing to take the risk of transitioning into a security token and seeing what happens. I also remember reading that you now have to transition your brokerage to Dinosaur, and so we certainly have our fair share of criticisms for the capabilities of T0. But at the end of the day, this is one step further to creating a big security token space. And when it comes to publicly traded shares, a lot of people tend to shy away or don't even think that that's part of this industry. But I'm a big believer that all aspects of capital markets are going to be disrupted by security tokens. T0 is leading the way in that.
Totally agree. I think that you hit on a lot of the points that I was also feeling. And Dr. Patrick Byrne references and is directly quoted in the press release as saying that they're trying to lead by example. He references specific examples in the past of the idea that for anyone to do something, for anything to catch on, they need to be able to be the first to lead the way, to show that this works. And so for that, I'm actually giving my company the week to Overstock. I think that Dr. Patrick Byrne is doing everything in his power as a public company CEO who has to answer to his board and his investors. I think that the fact that he's been able to accomplish so much in this industry, despite all of the odds stacked against any of us, and certainly the answers to many of the short-term questions I'm sure he's had to answer over the last couple of years. I think he's doing great stuff.
Deservedly so, Kyle. I think that's a great pick. And it actually reminds me of another company that said the very same thing. We brought them up last week. I think it's fair to bring them up again here on this subject, which was Provenance, right? Provenance also led by example because Mike Cagney, the CEO, knew that he wasn't going to be able to get other institutional lenders to leverage his blockchain to issue debt unless he issued his own debt. So he actually launched Figure first as a HELOC lender, a home equity line of credit lender, and I think they've done something like 70 to 80 million in originated on-chain loans to prove the model before they recently spun out Provenance to try and start targeting the industry. And Provenance also, in the talk that we referred to last week, Mike mentioned that they are doing an S1. They also intend to go fully public with this offering. This one's a little different. We're not taking an existing security token and transitioning it to another security token model here. We're actually talking about doing a note holder, if you will, for our token holder that is part of the blockchain network, as if we were part of Ethereum holders or any other type of blockchain holder. And as a result of being one of those holders, you're helping power the network because of a proof of stake model. And instead of trying to go about calling this a utility and trying to sort of take on the SEC, Mike has completely embraced securities laws and has said, okay, great, if I want the retail world, the retail public to hold my token, and I want to be able to offer dividends from people who hold my token, and we get this as what we do as a business, which is to be a debt issuance blockchain, well then you're a security, no doubt about it. So it's going to be interesting to see how he's going to go about listing this. Is it going to be a direct listing because they already have a pre-assigned value to how the network is established today? Are they going to do almost a traditional IPO roadshow, almost like Libra, trying to sign up a lot of big names and lenders and the like to leverage their blockchain before they go public? It's going to be very, very interesting. In fact, Mike also mentioned in that very same talk, they were looking to target Q4 of this year. So between T0 and Provenance, we're already getting a taste of publicly traded security tokens this year. And I think that's way, way sooner than most people thought.
Totally. And it's going to be very interesting to see in the T0 press release, or the Overstock rather press release, they note or they differentiate between digital offerings and their analog offering counterparts. And so with any of these publicly traded securities versus the security tokens the comparison will be very interesting to see how those trade on their markets and how they're valued by institutions, and the arbitrage opportunities and the disconnect between those two different things. And so it'll be very interesting to see. But moving forward, Herwig, where do you see publicly traded security tokens being used early on? Where are the first use cases, do you think, aside from the ones that we've mentioned today, that you see moving forward?
Yeah, no, I think we're certainly seeing the need for being able to, as Overstock put it, to restrict ownership transfer and make it easier to create a marketplace around your public security. The transparency that can come with that, to be able to leverage programmability, which much of Wall Street has gone very high tech. So the ability to now be able to trade on this information that could be on chain, and having a transaction log specifically for more over the counter products is very, very compelling. And I think we're certainly going to see a lot more use cases of that, with T0 helping lead that charge. I also think, on that side note, debt markets are another example of these sort of semi-private markets, largely the same few banks and same dealers that are calling each other every day, giving different quotes. A lot of the original 2008 crisis was built on this. And so I think for sure, blockchain, whether it's in the form of information, transparency, or even securitization and things like that, I think are going to see a lot of security token technology early on. What about you?
I totally agree. I think that all the pieces you have identified with improved transparency or reduced risk for a variety of reasons is only going to lead to an additional flow of capital into the market. And so more people are going to be confident and able to invest in more securities. I think it's only beneficial for our industry. It frees our global monetary policy and our investment possibilities. It also is very much going to ease the transition from private to public securities. And so as businesses are able to raise money and get a taste for liquidity for the companies themselves, as well as for the investors, and smoothing that transition from traditional private markets to public markets, I think is going to be great for the international financial system, to keep us from being over leveraged in any one industry or sector. So I think it's fantastic, and moving forward, I think that there's also additional progress that there is to be made, and maybe not immediate in terms of 2019 or 2020, but leveraging security tokens for CSOP plans and international trading. We've talked about these a lot together. What do you think about CSOP and connecting our offline worlds?
For those of you who don't know, because it's actually not a thing at all, it's just we've spoken about it so much. What Kyle is referring to with a CSOP is a customer stock option plan, which doesn't exist at all today. But it's a favorite subject of mine, because it's actually one of those compelling use cases of a publicly traded security token. It allows us to bridge the interaction between shareholders and customers, as well as really in general to other worlds. And in this case, an example could be linking the fact that you own enough shares of this company to earn an automatic rebate towards some of their products, or being able to link loyalty programs to shareholder benefits, and vice versa. So I think for sure that's much later on to happen, but those can definitely happen. And I agree to your point. It will be easier to transition to a public security. Who knows, even potentially globally, because the technology will have made it easier to bypass the U.S. markets. We don't know. And even regardless of that, inter-exchange trading globally. So to be able to make it easier and not have to use a GDR, and be able to have some kind of cross-border standards, cross-regulatory standards for the London Stock Exchange and Hong Kong and Singapore and the U.S. markets, all to be able to transact together, which will, of course, lead to a more global, liquid market.
And to clarify, these certainly are long-term thinking. So certainly with the inter-exchange and global trading, that really diminishes the monetary controls of a government. And so it's unlikely that we're going to see many changes in
Could be
that
decades,
area
right?
for decades. You look at many of the largest economies in Asia as well as Europe, and the controls that they like to have over those economic systems are incredibly tightly controlled in some places. And so they're not going to be incredibly incentivized to allow that capital to flow freely and to lose a lot of those price controls that have helped their economies grow so successfully. So it'll be interesting to see that balance over time through just kind of another one of those intercontinental political and economic discussions that I'm sure we'll be having for years. So incredibly interesting. If you have any other thoughts on that, Herwig, feel free to share them.
Yeah, no, the only thing I'll say is I think you're completely right. You're identifying this theme, right, which is capital markets are now becoming global, and financial services, across the board are going to have a huge impact on this. And whether it's small countries and islands trying to develop whole new infrastructures for capital markets, and whether it's the existing incumbents trying to defend them and evolve with them, we're going to see security tokens without a doubt disrupt all aspects of this, and that's why we're here covering this subject, and we hope that you'll stick with us in next week's episode. So thank you for tuning in.
Come back every Tuesday mornings. That's when we're going live with these things each week. Again, feel free to reach out to us, whether it's through the YouTube comments or reach out to me via Twitter. Certainly check out Herwig's articles. He's consistently posting thought leadership through our Medium channel at Security Token Group, so definitely go check that out. We have articles for all of our subsidiary companies, as well as guest featured articles and thought leadership, and it's really where we're trying to push all of our content in one place. So certainly feel free to check that out. And we'd love any comments or feedback, so definitely don't hesitate to reach out.